Hey everyone, welcome back to Corporate Decoder, the place where we dissect the often confusing world of corporate filings. Today we're diving into Unum Group's latest proxy statement, which might sound dull, but trust me, there are some juicy details hidden in here about how the company's doing and how its top executives get paid. You might even be surprised by how much the CEO makes compared to the average worker. This report basically asks shareholders to vote on important stuff, like electing directors, approving executive pay, and even signing off on a share plan for their employees in Europe. So let's put on our detective hats and decode what this all really means. First things first, this is a definitive proxy statement, meaning they're ready to roll and it has already been sent to shareholders. It also states that no fee is required, everything is up to date. Wow, this report is massive. It has everything from board meetings, leadership, compensation, and sustainability. We might be here for a while. Let's scroll to some interesting financial numbers. Before we dive into the financial highlights, it is important to understand that there are a few non-GAAP measures in this report. Non-GAAP means that the measure wasn't calculated using standard accounting rules. These measures can be helpful for understanding the company's performance, but it's also important to be aware that they might not always give you the full picture. For example, they use something called after-tax adjusted operating income, which basically takes their net income and makes some adjustments to give a clearer picture of their core business. The proxy also mentions adjusted book value, which excludes accumulated other comprehensive income. Occurs are important to be aware that they might not always give you the full picture. For example, they use something called after-tax adjusted operating income, which basically takes their net income and makes some adjustments to give a clearer picture of their core business. The proxy also mentions adjusted book value, which excludes accumulated other comprehensive income, I'll say, which fluctuates a lot. These numbers are helpful for the company, but as viewers of this video, keep this in mind. Let's take a look at their adjusted operating results for the past few years. Their after-tax adjusted operating income was about $1.5 billion in 2024, which is up from $1.51 billion in 2023. This shows a strong overall growth in a few years. I think Warren Buffett would be happy. The board of directors is very proud of their work. They feel they delivered growth and significant value to shareholders in 2024 with an exceptional 66% total shareholder return TSR. Here's a quick rundown of the key items shareholders will be voting on. First, the election of 11 directors. Second, an advisory vote on executive compensation. This is commonly called say on pay. Third, the ratification of the appointment of Ernst & Young as their independent accounting firm. Finally, the approval of a share option scheme for employees in the UK. Unum appears to have pre-standard compensation governance. They use a pay-for-performance system, have callback policies, and require stock ownership for executives. This basically means that the executives' pay is tied to how well the company performs, and if they mess up, they can call back some of their compensation. Let's talk about Unum's recent performance. In 2024, they reported after-tax adjusted operating income of $1.5 billion. It was primarily driven by growth in sales and earned premium. They also paid out $8 billion in benefits to people facing illness, injury, or loss of life. This is great as it shows they're fulfilling their purpose as a safety net for difficult times. This is offset by $971 million spent on share repurchases. The company is betting on itself. They are generating a lot of capital to benefit shareholders. They invested in their people, products, and technology to drive growth. Paid out $296.6 million in dividends and repurchased $971 million dividends and repurchased $971 million dividends and repurchased. 90 minutes of view, we're going to be investors. Unum delivered industry-leading value to shareholders in 2024. Total shareholder return for the year was a whopping 66%. To compare, Proxy peer group return was only outperformed the S&P Life and Health Index as well, with a return of only 23%. So, how much did the CEO Richard McKenney take home? In 2024, his annual compensation was about $15.3 million. This included a $1.1 million base salary, a $2.95 million annual incentive payout, and about $11.3 million in long-term incentives. Let's dive into some information on the board of directors. The board has a mix of experience, skills, and qualifications. Since 2018, 4 new directors have joined the board. It is always interesting to see how a company evaluates its members. Unum does this with annual evaluations. Directors provide feedback on peer performance and on the board and committees. This process is reviewed to get actionable feedback. The board has determined that all directors besides the CEO are independent. For a director to be considered independent, the board must determine the director has no material relationship with Unum. The governance committee looks for directors with high ethical standards, experience in key areas, commitment to the board, collegial effectiveness, and broad diversity. There are limits put on their board members. Except for the CEO, no director can serve on more than 3 public company boards. For the audit committee, it's 2 other companies. Let's meet the nominees. The script provides short bios for each of the 11 director nominees. The non-employee directors get paid pretty well too. The annual cash retainer is $125,000 and they also get a $175,000 annual restricted stock unit award. Committee chairs get an extra $25,000 and the board chairman gets an additional $25,000. 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 The committees each focus on different aspects of the business. There is the audit, risk and finance, governance, human capital, and regulatory compliance. The risk and finance committee oversees the company's risk management. This includes their investment strategy and cybersecurity. Here are some risks to keep in mind. The proxy statement contains forward-looking statements, which means that they're not guarantees of future performance. There are risks and uncertainties involved, and actual results could differ, so take everything with a grain of salt. The board also has a code of conduct applicable to all directors, officers, and employees. This document establishes business practices and ethics. The company engages with shareholders through earnings calls, conferences, and direct meetings. They also monitor Unum's culture through engagement surveys and ethics hotlines. Unum focuses on helping people in moments that matter, offering a financial safety net for millions. Unum has been recognized for being a world's most ethical company for 5 years in a row. Ernst & Young is likely to be reappointed as the independent auditor, a position they have held since 1999 and have increased independence. The total fees paid to them were about $10.3 million. Let's move on to how Unum decides to pay its top executives. The Human Capital Committee wants to reward performance, increase shareholder returns, and attract and retain talented individuals. They have also provided some analysis regarding the compensation for Richard McKenney. There is also a list of executive compensation practices, all pretty standard: a pay-for-performance philosophy, independent compensation consultant, stock ownership requirements. From a business perspective, Unum is saying the right things. They are laser focused on the needs of their customers, and they have seen a lot of success by investing into their digital capabilities. Long-term care performance has been stabilized for the business through rate increases and operational effectiveness and reduction of risk through reinsurance. This is positive and it is important to pay attention. The committee approved the compensation of 5 individuals which are listed on this includes the compensation breakdown for the following 5 years. So what can we glean from the summaries? Well, clearly the committee is pleased with each executive. They are still working there, and most have positive performance assessments, with the top 2 being McKenney and Zabel, with the most notable increase for Pine in charge of group benefits, the largest with a target increase. Finally, Unum provides benefits to attract and retain workers. The benefits provided includes healthcare, well-being, 401k, pension, and financial assistance. Also, the previous pension plans for the NAO are frozen. Those eligible, like Richard McKenney, have ASIC to those plans. Finally, information for those who owned more than 5% of the company are the Vanguard Group, BlackRock Inc., and Norges Bank. As required by SEC rules, we are providing the following information about the ratio of the annual total compensation of our median compensated employee to the annual total compensation of our Chief Executive Officer. The 2024 annual total compensation of our Chief Executive Officer was $18,031. 2024 was $83,055. The 2024 annual total compensation of Richard McKenney, our Chief Executive Officer, was $18,031. 25 was $83,055. That's 2 CU. Morrow's 2024 annual total compensation of a median employee as of December 31, 2024 was $83,155. The 2024 annual total compensation of Richard McKenney, our Chief Executive Officer, was $18,031. 2024 annual total compensation of Richard McKenney, our Chief Executive Officer, was $18,033,055. The ratio of these amounts, also referred to as the CEO pay ratio, Well, overall, Unum seems to be doing well. Their financials seem to be in order and their operations appear to be generating great results. I like that management has a good chunk of holdings to align them with shareholder interest. It would be better for diversity if there wasn't so many directors. There were a lot of mentions about increasing shareholder returns, and many of those involved buying back shares, which helps drive share price in short term, but that money can be better used for research or other benefits instead of artificially inflating the price. I would say for most people, this is a pretty good company. Overall, anyway, what are your thoughts on this video? Let me know what you think down in the comments, and please subscribe to continue exploring the world of corporate reports and finances. Thanks for watching.